1 second. It's got to jump around. Hang on.
Yep, live now. I got.
Okay. Okay, Jay, you're on.
No, I'm on.
Mike's on.
Oh, sorry.
Hey, good morning, everybody. Welcome to Saturday, May 2nd. We're so glad to have you here with us for this virtual homebuyer seminar. We are in crazy times for sure, and we have been thinking about how we could best get the word out in regards to what people need to be doing during this time as it relates to real estate. So we decided to create this virtual homebuyer seminar, and through the last several days, we have decided to do it via Zoom, but sending it out to the Facebook pages. So if you're joining us having registered for the Zoom, we're glad you're here. But if you're just hanging out at home and enjoying this beautiful day and realizing that, hey, there's something live on that I can watch. I mean, we all know on TV right now, nothing's live other than the news, and we really don't want to watch that. And so, hey, how about this? There's a live something on. So hopefully you're joining us. I know that was the way I was just a few nights ago when the NFL did their draft. I'm not a big NFL draft person, but I found myself watching it on Thursday night just because it was live. It wasn't the 2008 Masters. It wasn't the 2012 Kentucky Derby. It literally was live. It was happening right there. And in all honesty, it was being done virtually. Commissioner in his basement. They created a studio, and his studio looks much different than mine here in my room above my garage. But anyway, we just wanted to spend some time with you in the next hour, just going over the fact that you can in fact buy and you can in fact sell houses during this time. And we certainly have been doing it at Roy Wheeler Realty Company. We had a record month in March, even though this started about the middle of March. And yes, things slowed down a little bit, but we've already seen just in the last week activity picking back up. And I'm sure Jay, Dominic from Movement Mortgage, and Bill Tucker from Tucker Griffin and Barnes will probably share that same kind of information. But just in getting started with this, and Vince, if you want to put that slide up for a minute, we want to just walk you through kind of a roadmap through the home buying process from when you first decide that, hey, maybe I'm interested in buying a house. I've never bought a house before. I'm renting. The apartment's too small. I'm tired of being in this place. I need some room. I'd like to have a place that has at least a balcony. You can look at this roadmap, and I'm only going to take the first couple steps on it, and then I'm going to hand it off to Jay and Bill. But as you look at this roadmap, a lot of people think it's just about finding a house and writing a contract and 45, 60 days later, getting the keys to the house. But you can see there are a lot of steps along the way to get to the finish line, to get to the place where you get to say, welcome home. And, carry somebody across the threshold or jangle the keys and find yourself in a place where you own something versus paying rent that just goes away each and every time. And a couple quick things just before I really get started, administrative things. If you're watching this and you know other people who might be interested in hearing what we have to say, please share it. Please share it on your Facebook page. And if you want more information, please email homes@roywheeler.com, and we'll make sure we get one of our professional associates to get in touch with you. We have a over 98% client satisfaction rating, which basically means people rate us either excellent or very good. And I can't see that, Vincent, but hopefully everybody else can. But homes@roywheeler.com, and we've got 98% client satisfaction rate, which means people will recommend us to their friends and family. And or you can call 434-951-5124, and Vincent, who will take those calls, and again, we'll get them. Get one of our associates to give you a call back Yes, you will, Vincent. You will do that, and we'll get a realtor to call you back and get you the information you need. We'll get you with Jay, and I'm sure Jay and Bill Tucker will both give you their contact information. But let me just walk through a few things before I hand it off to Jay. And I'm grateful for the different people that I can see are already watching on the Facebook live stream. Welcome and thanks for being here. But the thing that I want to just start out with is the key to having a good home buying experience, whether it's COVID-19 or not, is choosing the right people to help you. You want to have trusted professionals, people that you know are truly caring about you getting exactly what you're looking for. So you want to get the right people to help you. You want to be well prepared, and you want to be able to understand the process. COVID-19 has certainly added some challenges, but rest assured it can still be done, as I've already shared, and there are good reasons to move forward right now. Two of these reasons are buying power and less competition. And Jay's going to be talking more about the financial aspect of that. But right now, at this particular point, um, things had really been going upward as far as pricing through the month of March. But right now, things have settled down a little bit, and you might be able to buy a house for a little bit less than you could have a month ago, and that's good for you. The other thing is, with interest rates where they are, that's incredible buying power. And Jay will, talk to you about the fact that for every 1/4% difference in your mortgage, it can mean as much as $10,000 in buying power. And that's significant. When you think about being able to get a house for a little bit less and then getting the benefit of the interest rate, that's a phenomenal thing that should get you thinking about doing this. The second part of that is less competition. Let's just be honest. There are people that still are not willing to be out and about. They're just going to wait and see how things play out. And I think, again, they'd probably be okay from a standpoint of interest rates. But I think when we come out of this COVID-19 slowdown, you're going to see a like almost a rocket ship take off again in real estate, and which will mean prices will go back up. So there are not quite as many people out there looking. And even though there are multiple contracts on properties, we're seeing them still. We're also seeing people getting an opportunity to find a house and not be in that significant competition. So again, buying power and less competition are two reasons why you should think about doing something now. If you're not comfortable with it, we totally get it. But if you are willing to kind of look through the process and get with somebody who knows what they're doing, it could really be a good time for you. Expect to have more of the process be done virtually. That's no doubt. More electronically, less face-to-face. This will include everything from the walkthrough to the signing of documents, which I know Bill Tucker will talk about more later, and just complying and following the shelter at home and social distancing guidelines. And because of that, realtors are doing more and more online. I mean, here we are. We're doing a virtual homebuyer seminar. We'd be in a library right now, or we'd be in a community center, and we'd be serving you coffee and danishes. And I wish we could do that, but we're not. We're doing it. We're doing it virtually, and we're having to adapt and learn how to do these things differently. So be ready to do that. It's not scary. A month ago, 6 weeks ago, I couldn't do any of this stuff, and so anybody with some help can learn how to do these things. The good news is, as long as realtors and their clients take certain precautions, it's still possible to tour homes. But again, you can get video conferencing, you can do FaceTime Live, you can do Zoom, and a lot of things that agents are doing is they may go and FaceTime Live a house by themselves initially, and do 2 or 3 for you. And then if one really piques your interest and you want to go see it, then you're only having to go to see one, and you're not having to go out and tour a whole lot of other things. You can't go to public open houses right now; they're not happening. But a lot of agents are doing virtual open houses, so watch for those. Ask your agent about those, and so remember that you want to, again, stay 6 feet apart during the showing. You want to be ready to wash your hands, hand sanitizer, have Lysol wipes if you can find them. And you want to take your shoes off before you go in the house. And if you can, cover your footwear with those booties. And then a lot of the sellers are making it easy for you not to have to worry about it, in the fact that they're leaving all the lights on. They're leaving the cabinets open, the internal doors open, so you don't have to touch anything. You just go in the house, you walk through the house at your leisure, taking your time. And then in most situations, the clients, sellers, are disinfecting their homes after the tour. And so again, making it ready for the next folks. You want to have some patience for sure. It's going to take a little bit longer for the agents to arrange these type of tours than just calling up and getting access through the lockbox. So remember to have some patience, expect delays, and again, prepare for altered processes. I can't emphasize enough, whether it's us or somebody else that you know in the business, picking a professional you can trust makes all the difference. It'll help make the stress of buying a home much more manageable. Jay Dominic from Movement Mortgage is here and is going to walk you through that. Bill Tucker from Tucker Griffin Barnes is here to walk you through that process. And I guess the last thing I would say to you is this is a decision that you need to make. Don't let anybody try to force you into doing something, but at the same time, be ready to have some fun with this. And the good news is that everybody has adapted. The mortgage companies have adapted, the title companies adapted. And so there really hasn't been a significant amount of delay. If you bought a house today, let's say you went out this weekend and you wrote a contract on the house and it got accepted, you can pretty much expect that by the end of middle of June to end of June, you can close. I would encourage you, and I'm sure Bill will too, don't make a settlement sooner than 45 days. There are just too many things that are going on that need to happen, including the court, home inspections, appraisers. Everybody's is taking a little bit more time. But again, we're glad you're here. We appreciate you taking the time to be with us today. I'm going to hand it off now to Jay Dominic from Movement Mortgage. And if you have questions, email homes@roywheeler.com. We'll get back to you. Call 434-951-5124 and let us help you that way. And I'm going, as soon as I hand this off to Jay, I'm going to start trying to manage the comment boxes along with my friend, Katie West from Charlottesville Settlement Company, who works with Bill Tucker. I'm grateful to have Charlottesville Settlement Company, Bill Tucker, Tucker Griffin Barnes, and Movement Mortgage as partners with our company, Roy Wheeler Realty Company. And with that, I'll hand it off to my friend, Jay Dominic.
Thank you, Michael. Good morning, everyone. I'm going to share my screen here. So we have a little something to follow on, but we're not going to just read through it. So we're going to talk about the home buyer process and where we go. So here we are. This is me. This is my company, Movement Mortgage. Not going to delve too deeply into that, but we're a special company, different company as mortgage lenders go. So I'd encourage you to go to our website, movement.com, and check us out and all the things we do for the communities. Okay, so I don't think I have to sell you on this. Michael touched on this a little bit, so I'm going to skip ahead. I think there's a lot of good reasons why you should buy instead of renting. So the first thing you do is you're going to try to find your experts. Okay, this slide should have, I would argue that finding a real estate agent, mortgage professional, insurance agent, okay, maybe, but I would probably insert attorney into there. But the first step in all of this is, okay, you found an agent. Okay, now it begins and ends where you go from here with the mortgage process. What can you get approved for? Everybody can go out there and find the dream home they want, but they may not be able to afford it or even qualify for a mortgage. So it's discouraging when a lot of people go out there and they find something, it's like they weren't prepared. They weren't prepared to write that contract, and now they've got deadlines, they've got money spent, and they just might not be there yet. I'm working through one right now that came up where the guy wrote the contract without ever having been pre-qualified, and frankly, there's some issues that we are going to have to try to get through. So you want to start with the mortgage loan officer that you trust, because you want to get an idea of one, what sale price should I be looking in? What's my loan amount going to be? How much cash am I going to need to buy this house? Is my credit okay where it is? What is my payment going to be? Okay, stay away from the online calculators. I get feedback from that all the time. It's like, boy, none of these calculators are right. it's like, okay, yeah, because they're largely advertisements. So just sort of keep that in mind. Find your mortgage professional and they can help you through that process. Okay, it's pretty easy these days digitally. People go to my website, do an online application. You can upload documents securely. Last Sunday, I did a pre-approval in an hour. Sometimes there's more documentation needed. It takes a little bit longer, but that's where you want to begin. That's going to be the critical component of all this, is making sure that you know what your financing is and what you should be out there shopping for. Okay. Now, when you're talking about how you get pre-approved for a mortgage, we're going to be looking at income. We're going to be looking at debt, how much money you have available, credit history. Okay. We're going to have credit scores. What credit scores you have will help dictate what loan program you wind up in. It'll also dictate your rate, maybe your mortgage insurance rate. So it's a critical component. So even if you are thinking about buying a house, maybe you're thinking, well, maybe next spring, maybe I'm doing something now, or I'm furloughed or something like that. You don't want to wait till you're ready to pull the trigger and say, okay, let's go out and buy a house. You want to get it out in front of it and get the pre-qualification done, because we can sometimes plan or correct or improve your situation and your loan programs ahead of time. And then you'll also have some goals as to what you need as far as money for down payment, and how much you need depends on the loan program. But the money is a difficult part, especially for first-time home buyers. So when you think of first-time home buyer programs, a lot of times they're going to be geared towards reduced loan amounts. Reduced down payments. Sometimes little or no down payment is required. There are some loan programs available out there with down payment assistance, but how much you put down is going to affect your total mortgage payment. Okay, debt to income. So this is how we qualify people. So debt to income is a big component. So it's not just, do I have a good job and is my credit good? We have to show the ability to repay the mortgage. So your debt to income is this. It's what percentage of your housing expense that you want to get, plus your other monthly debts as a percentage of your gross monthly income. So for instance, just use round easy numbers. If my gross income was $1,000 a month, and a mortgage loan program said that your house payment shouldn't be more, your debt to income ratio shouldn't be more than 43% of that, then your house payment plus your other monthly debts can't exceed $430. So that's, of course, only with $1,000, but that's how the debt to income ratio works, that percentage. And those percentages will vary depending on the specific loan program. So when we talk about your mortgage payment, at least when I talk to my borrowers, I never just mention principal and interest because it's meaningless. You want to look at the total payment, okay, for qualifying. So it's going to include principal and interest on the loan, how much the real estate taxes are, it's going to be part of your payment, how much your homeowner's insurance is, and also mortgage insurance. So if you're doing certain types of loans, you're going to have mortgage insurance on it as well. That's going to be included in there. In addition, if you have homeowners association fees or condo fees, that's part of your housing expense that's considered in qualifying. So I had a text from a realtor last night. I pre-qualified a borrower for about a $240,000 house price range. It's not really just the price, because it depends on the sale price, the total housing expense. So if the taxes are different in different localities, that could change that number a little bit. But he was looking at a townhouse in Charlottesville, and the homeowner association fee is over $200 a month, like $235. That changes it. So his sale price is not $230 anymore, or $240 they qualify for. That's reduced because he wanted to buy this townhouse with the homeowner association fee that's relatively high. So it's the total housing expense that gets considered in there. So when I'm pre-qualifying somebody, part of this job is to, one, make sure that we've got all the components in place to qualify for mortgage, and then trying to find the best loan program that suits you. One, based on what you may qualify for, and two, what's going to garner you the best payment, down payment, cash to close possibilities. So you'll hear these terms around conventional loan. These are your Fannie Mae and Freddie Mac, if you've heard those terms before. FHA is a government insured loan, insured by HUD. Conventional loans for first-time homebuyers, by the way, can be as little as 3% down. FHA is a government insured loan. VA is for veterans. It's a terrific loan program. But so for the conventional loan, if you're a first-time home buyer, you can put as little as 3% down. So if you want to buy a $300,000 house, your down payment could be only $9,000, and you have closing costs, which will be about the same amount or close to it. But you can also negotiate the seller to pay some of those closing costs. The conventional loan is going to be most beneficial if you have pretty good credit, because the rates on conventional loans are highly sensitive to credit score. So if somebody has a 3% down loan and their credit score is marginal, then they're going to pay a serious premium on their interest rate and on their mortgage insurance. So if that's the case, then I might say we're going to get a better deal by going to FHA. So it stands for Federal Housing Administration. It's a great loan, has been around for many, many years. The minimum down payment is 3.5%. Good flexibility in qualifying and on that debt to income ratio that we talked about. VA, if you're active duty military, separated from service, VA loan is a terrific loan program. You can buy a house with zero down payment. There is no monthly mortgage insurance. It has flexible qualifying, liberal on minimum credit scores for the loan program. All in all, a great loan program. And if you're not a first-time home buyer out there, this is a misconception. If you've used your VA loan before and you sold that house and paid it off, you're eligible to use it again. So another thing to keep in mind about that. But never, for the realtors that are watching, never forget to ask that question if somebody is a veteran, because that can open up a lot of doors for them. And sometimes they just don't think they need a VA loan, but it could be the best option. USDA is another government guaranteed loan program. It's for, quote, rural areas, end quote. But it doesn't have to be as rural as you think. So you just have to get a little ways out of Charlottesville and you're in an eligible area. But it's got income limitations on it. So there's no down payment required. You get seller pay closing costs. The mortgage insurance is low. It doesn't matter what your credit score is. Everybody gets the same mortgage insurance. So it is really a great program, probably underutilized. I love them personally. If you're looking at low or no down payment, USDA is second only to VA. I would probably put it that way. So just another thing to consider. And this is why I'm talking about this pre-approval thing, because you may think, oh, I can do a USDA loan. And then you find out, if you go out and write a contract and you say, oh my gosh, it's not in an eligible area, or our household income is too high because you're only counting one of the spouses in qualifying, but USDA looks at all of it. So it's another thing to consider. This is all the things we're going to try to determine up front with our pre-qualification. Okay, Virginia Housing Development Authority caters mostly to first-time home buyers. They've got some great low and no down payment programs. They've got mortgage credit certificates, which gives you a tax credit, not just a deduction, a tax credit for as long as you own your home and live in it as your primary residence. They've got some income and sale price limitations too. Some of the terminology is when you talk about rates, and Michael alluded to this earlier, you can adjust your rate by paying points up front. So if you hear somebody say, I'm getting a rate with 0 points, that means you're not paying anything extra for that loan interest rate. If you say, I'd like to get a lower interest rate, you can buy it down, you can pay points. Each point is 1% of your loan amount. So if you've got a $200,000 loan and you want to move your interest rate down, maybe 0.25%, you'd have to pay $2,000 to get that. The preponderance of people these days are going with 0 points or close to it. Although for some reason during this recent crisis, with the pricing being volatile and wacky, sometimes it's beneficial to pay a little bit just to find a sweet spot in the pricing. Just like you can pay points to go down in the interest rate, if you're tight on cash, you can also do the opposite. Say, hey, look, I'll move my interest rate up a 0.25%, and the lender will not give me a credit of cash that I can use towards my closing costs. When we're looking at interest rates, you've got your note rate and your APR. So if the interest rate is 3.5, say, that's how your payment is calculated. APR is a calculation that expresses the cost of your credit in a yearly in a different format. So the government requires us to disclose it that way. I don't find it as useful as a lot of people because it can hide a lot of things. You can get a lower APR by piling on a bunch of points because they're amortizing over 30 years. I mean, but the key in determining what your cost is to me is just looking at your closing costs, looking at your note rate, making sure that payment is right and how many points are associated with it. Okay. All right. So we've connected with the movement loan officer. We know what we can afford. We know what we qualify for. We know what loan program we're going for. And we've gotten pre-approved. Once we've done that, now you go out with your agent. Okay, you may have your agent picked out already, and that's perfectly fine. But you want to make sure that you've got I can't emphasize this enough. You want to make sure you've got your financing buttoned up. Okay, because if you go out this weekend and you've not done any of the legwork with the financing ahead of time, you find that house you love, you want to make an offer. Maybe there's multiple offers on that. Not uncommon these days. Okay, you're behind the 8 ball already because now we've got to get a phone call that says, okay, I have to get a pre-approval letter. And maybe I could do it in an hour like last weekend on a Saturday. Maybe I can't, like a gentleman I'm working on right here, because he's self-employed. I needed to get his tax returns. It took him 5 days to track those down and get them to me. So once you do make an offer, it gets accepted. This is oversimplifying it, but then we get into the real mortgage process. We collect the rest of the documentation. We get you approved quickly, get the appraisal ordered. As Michael mentioned, there's a little bit of a slower time frame for appraisers these days. We order the title work from the attorney's office. That takes a little bit longer, especially in some localities. There's some difficulty. Once we get through all that, then we close and the house is yours. A couple tips that you're going through. For instance, if you're thinking about buying a house, I wouldn't run out and start shopping around for new credit. All right. I've got somebody I talked to yesterday, and since I talked to him the first time, they went out and they just got another car loan. Well, that $300 a month is the difference of $60,000 in what they may qualify for now. So you can always get a car after you buy a house. We've already made the judgment that you're going to manage your financial affairs. You just can't get it before. And if you apply for a credit, that's going to hurt your credit score a little bit too. Opening a new account, by the way, also this person, it hurt their credit score by about 30 points. Opening up new accounts makes your credit score drop. These are all types of things we go through up front when we talk about credit and planning ahead. In terms of credit scoring, don't max out or overcharge your existing cards. When we pull up your credit report, 30% of your score is going to be what percentage of your credit card balances you owe, your credit card limits rather. Okay. So you may pay all your payments on time, but you don't, but if you carry a high balance, if you owe $500 on a $500 credit limit card, your credit score is going to suffer, even if you made all your payments on time. This hopping around, consolidating debt into 1 or 2 cards for the same reason may not be a good thing to do. If you've got a collection or judgment or tax lien on your credit report, I'm going to go off of this standard sheet that my company provided and say, do not do this stuff until you get the advice from your mortgage loan officer. Okay. In some cases, you don't have to pay off collections. In some cases, paying off collections can actually hurt your credit score. So consult first before acting on any of those things. And for the same reasons, don't make any large purchases, stay current on your accounts, don't make any large deposits into your accounts. We check the last 2 months of your bank statements when you apply for a mortgage. Okay, if there are large deposits in there, then we need to explore those, because it makes a difference. Not just do you have the money for closing, but where it comes from. The source of those funds is critical. So in short, I'm just going to wrap it up and say that that when you first start thinking about, I want to buy a house, I want to be a homeowner, whether you're thinking it might be a year from now, whether you think it might be next month, you want to get with a loan officer, get your pre-qualification done, make sure you're on the same path as far as what you think you can afford, what you may qualify for, what's the best loan program, and all these things are tied close to the interest rate. So there were times in the past couple months where the rates had been lower and they've been much higher. You know, there was a time in not too distant past where they went up about 0.75% in 5 days. So they can swing a lot. And also in this climate, there's been some changes to the mortgage guidelines, some restrictions in place, some have been loosened up. So that's why when you get pre-qualified, you want to always stay in touch with your loan officer. So I've had some people that that weren't qualified before, and now they are, because we've loosened up the some credit score limitations. I had a young lady call me yesterday, and she's in one of the industries that is affected right now, and she is commissioned and she is not working. And although she's written, I've written 5 different pre-approval letters over the past year while she searches for the perfect house. When she called me yesterday and she wanted to make the offer, I told her, you can't make an offer now. You're not working, you're commissioned, and you've got to wait till you get back to work, because lenders are very leery of that stuff. So I think I've probably used up plenty of my time. So my contact information is on this screen earlier on. You can backtrack, call me anytime. I'll be happy to help. And I guess I can turn it straight over to Bill Tucker. I'll stop sharing my screen.
Thanks, Jay and Michael and Vincent, for doing all this. My name is Bill Tucker. I am a real estate attorney. That's all I do is real estate closings, but it keeps me pretty busy, especially in these trying times. Everything's a little more difficult, but as Michael said, if you allow enough time and enough patience, we can make closings happen. In fact, this last month, the month of April, we closed as many as we did during COVID as we did a year ago when everything was normal. So we are able to make transactions happen, and you just have to have patience. I think we talked before, you need to pick a good team, and part of the team is a realtor, the loan officer. Didn't mention that there's going to be probably a home inspection. Your realtor will help you find somebody to do a home inspection. All of this process takes time, including, as Jay said, the loan application. The attorney or a settlement agent, Katie West, who I think is somewhere around here, runs a settlement company called Charlottesville Settlement Company, and they're able to do closings too. As an attorney, that's what we do in our office also. But mainly, what we do is we're going to be the end of the process. We are going to be the place where you come and actually sit down and sign all the loan papers, review the deed, review the title work, etc., so that you can own your property. But having said that, we like to get involved early in the process as possible. So your realtor will, once you find a house, once it gets under contract, hopefully we'll give you the names of some attorneys and settlement companies that can help you transact the whole run through the whole transaction, give you the names of some mortgage companies to deal with. Jay, of course, is one of the best. And we like to, as an attorney or a settlement company, we want to get involved early. For example, one of the things we want to advise you on early on is let's get a title search done on the property you're going to buy. And we'll talk about what a title search means in just a second. We also may be around if you do your inspection and there's some items that there are questions about and you want some legal advice. But anyway, what I'm supposed to talk about is the end of the process, which is preparing for the loan closing. So I think we have a slide, I guess. Yeah, there you go. Got a slide. So preparing for the loan closing. It talks about what do you need to bring to the closing. So let's pretend like you're planning to close on Friday. Let's say you closed yesterday. You wanted to close yesterday on Friday. What do you need to bring to the closing? What's going to happen leading up to Friday? The chart says cashiers or certified check. One day I'm going to figure out the technology how to change this. I know it's got to be easy to change it. We do not want a cashier's or a certified check. We only use bank wires now. There's too much fraud going on with checks, even certified and cashier's checks. So what we're going to require is you're going to wire proceeds to the attorney or settlement company doing your transaction. The bank making the loan, Movement Mortgage, is going to do the same thing. They're going to wire us loan proceeds. So you need to bring to closing also your homeowner's insurance. Now, in reality, you've actually gotten your homeowner's insurance probably 2 or 3 weeks before the closing. Once you've done your inspection and know for sure you're buying the house, go ahead and contact your insurance company. I tell people as sort of a practical tip is probably check with whoever you have your car insurance with and maybe check with a couple of other companies because in essence you're going to pay for homeowners insurance every year, so you might as well do a little shopping there. If you usually go and have your homeowner's insurance and your car insurance bundled at the same company, you may get some discounts. So do a little shopping on homeowner's insurance. But at the closing, you would have already picked the homeowner's insurance company and the loan papers. Those papers were already been presented to us. We would have given them to the lender. So we'll all ready to be ready to close. Bring your a photo ID. We're going to need to prove you're who you say you are. So driver's license is good. If you don't have a driver's license, some kind of passport or something else that's an official government document. And the lender may have some other items they've required that they need to look at and have presented at closing. And that's just piecemeal depending on the specific circumstances. Talk about who's going to do your closing. I sort of mentioned you can have a real estate attorney do it, or you can have a settlement agent. I, of course, as an attorney, am prejudiced and think you should have an attorney. Katie West, who is on this call, runs a settlement company that's a very, very good settlement company, Charlottesville Settlement Company. They do a great job. They do a lot of what the attorney does. The only difference is we can give legal advice and they can't. So I always tell people when you're buying a property, it's probably your most important purchase you'll ever make. For a couple $100, it makes sense to have an attorney there giving you advice. It also says, the chart says, choose somebody who's experienced. You can use the same attorney or settlement company. Most people recommend that each party has their own representative, their own attorney, their own settlement company representing them. So the buyer will have an attorney and the seller will have an attorney representing them. So we'll go on to the next slide. So one of the things that the attorney is going to do, or the settlement company is going to do, let's just call them the settlement agent. So I don't have to keep saying attorney and settlement company. One of the things the settlement agent is going to do is early in the process, they're going to order a title search on the property you're selecting to buy. What a title search means is you go into the clerk's office where the property is located. Let's say the property you're planning to buy is Albemarle County. So we used to go into the Albemarle County Circuit Court's office. Unfortunately, they're all closed now. So we can only search title online. Now that's not impossible. In fact, it's pretty simple to do, but we're going to want to check the records in that clerk's office to see who's owned the property in the past, what kind of liens they may have on it, whether they have a mortgage that needs to be paid off when the seller sells the property, what kind of easements affect the property, are there any restrictive covenants on the property, is there right-of-way easement if you're not on a state road, road maintenance agreements. Anyway, all of that's going to be discovered in the title search. So we recommend that that title search gets done really early in the process. So typically once you've signed your contract, picked your lender, picked your settlement agent, they're probably going to recommend, let's go ahead and get the title search done now so that we can get title insurance and know what kind of issues the seller may have to deal with. Like there's an old unreleased deed of trust that's been paid off, but it hasn't been released to records. So that gives the seller a chance to get it done. When you select title insurance, the lender requires what's called a lender's title insurance policy. It's a requirement. The lender wants to know that the title to the property is good title, and they're going to have a good first mortgage on the property. You have an option as a buyer to choose owner's title insurance. That's what protects you in addition to the lender's policy that protects the bank. You actually, we sort of insist that you get owner's insurance. It's crazy not to get it. Your settlement agent will tell you the difference in the cost. It's typically not that much more to get it. In fact, when Jay gives you an estimate of closing costs, he's probably put in that estimate owner's title insurance. So it's not going to really be an extra cost, but it is an option. In my practice, 99% of my buyers get owner's title insurance. The ones who don't get it, very few, I make them sign some big disclaimer saying, I've told you you should get owner's title insurance. You've elected not to get it, so you're going to accept all the risk of not getting it. Most people, like I say, 99% of the people get it, and it's worth having. Also, the last part of the slide says we recommend a survey. When we talk about a survey, we're talking about a physical survey. Each property you're going to buy already has a plat, a boundary plat, showing the boundary lines of the property you're going to buy. A physical survey is going to not only show the boundary lines, it's going to also include all the improvements on the property, where the house is located, where the sidewalk is the driveway, here's the driveway. Is there any problem with the driveway being off your property line? If it is off your line, is there a right of way? It's not that complicated, but everybody ought to know, in my opinion, where their house is located on their property, where their fences are, just so you kind of know where everything is. So we recommend a survey, but that's an optional expense too. Documents for the closing. When you actually get to the closing, they're going to be probably 30 or so documents you're going to look at and have to sign or review. The most important one is the deed. Think of the deed as like a car title. The deed is what says that the seller is selling you the property, and now you own this particular property. Let's say it's 1400 Smith Road, but it's got a legal description. The legal description may be Lot 12, Smith Subdivision. So the deed's going to describe the legal description of what the property is you're buying. When you take title, you have options of how to take title. Most people take title in their own name. If they're a husband and wife, they're going to take title as tenants by the entireties with survivorship. That's a special way that husbands and wives can own property. It'll pass to the survivor if something happens to one of them, so you don't need a will to do that. Also, there's special protections if you own it as husband and the wife. We call it T by E. If you're going to own it with two people who aren't married, then you can own it as tenants in common or joint tenants with survivorship. We'll explain that to you, and you can select which one you want. Other legal documents at the closing. You're going to have probably the most important one for the bank, and for you is the deed of trust note. What that is that's your promise to pay. That's where you've agreed. I'm going to own this property. I'm going to agree that because the bank is making me a loan, I'm going to pay the bank back according to the terms in the promissory note. And those terms are going to be the same as what Jay at the beginning of the process outlined to you, that your loan amount is going to be X, your interest rate is going to be Y, and your monthly payment is going to be Z. So what Jay gave you at the beginning as a good faith estimate, it's going to be now spelled out specifically in the deed of trust note. Just so everybody knows, you make your payments, they're due on the first of the month. You're paying interest for the previous month. Completely different than rent. Rent you pay in advance. On your mortgage payment, your deed of trust payments, you pay that in arrears. Usually I say any questions, but I don't know who to question. Who's going to ask me a question? Anybody have a question? At least I asked it. Let's move on to the next slide. That talks.
Hey, Bill, let me cut in just for 1 second. If anybody does have a question, please feel free to put it in the chat box. And I'm trying my best to facilitate that. And we'll get that information to Bill or Jay and make sure we get that for you. But again, if you have any questions that you want to do privately, homes@roywheeler.com is the email address, phone number 434-951-5124. Sorry, Bill, take it away.
Oh, no problem. Just want to go through this a little more quickly because I bet we're going to not have enough time. The legal, next set of legal documents is the mortgage. In Virginia, we call it the mortgage, a deed of trust. It's the same thing. It's where you take the property you just bought. I think we called it Lot 12 Smith subdivision. You take Lot 12 and pledge it as collateral for the promissory note that you've made to the bank to make payments to the bank. It's kind of like the lien on a car title, but it's called a deed of trust. There are going to be a bunch of other forms. Probably the next most important one is the closing disclosure. We all refer to it as the CD. It itemizes all your closing costs. You're going to actually get the CD 3 days before the closing. It's a federal requirement that the lender give you the CD 3 days before closing. The CD is going to be remarkably close to the original loan estimation that you were given regarding closing costs. It'll be changed a little bit depending on the day you're closing, your homeowner's insurance. Several things will change it, but the closing disclosure is remarkably close to the closing. In that 3 days when you get the closing disclosure, there's a possibility that there may be some slight changes to it. If there are, those will be explained to you, but the amount of money that you'll need to bring to closing is going to be, pretty much outlined in that closing disclosure.
Hey, Bill, real quickly, and you may have this later, but somebody just asked, how are we doing as far as any delays or, as I said earlier on, Jay has recommended no less than 45 days, 60 days to be comfortable. Are you seeing delays beyond that?
Oh yeah, I mean, everything is taking longer to do. There are all kind of protocols in place for how actually we do closings now. In order to keep social distancing, we're trying to use as many times as we can powers of attorney, where someone will give a power of attorney maybe to someone in our office. Some lenders or the programs that the loans are under have limits on how you can use powers of attorney. If we use a power of attorney, then that means you don't have to come into the closing. We'll send you loan documents to review, and then once you've approved them and we've answered questions, then we'll sign them on your behalf. Powers of attorney, we actually have a procedure where people can drive up and we'll go outside and meet them in the car and sign the power of attorney. If you have to have a face-to-face closing, we've set up a place that we have a big glass wall between us and the client. So the client's on one side of the glass wall, we're on the other. We can see what they're doing. We'll have a cell phone available so people can talk, and that way we again keep social distancing. But the whole process to get from contract to that closing is going to take longer because every part of the process is going to be delayed. The appraisal takes longer, the home inspection may take longer, processing all the paperwork, the title search could take longer because remember the clerk's offices aren't closed or are not open to the public. So 45 to 60 days is hopefully going to make it work. We occasionally get somebody sending us a contract, hey, we just got this, can we close in a week? And typically the answer is no, thank you. But we'll do it as quick as we can. There's no such thing as a week closing now. That answer the question, Michael?
Yeah, thank you so much.
All right, we'll keep moving on. Anyway, there are going to be a bunch of other documents to sign. All I can tell you is the closing will take about an hour. Expect to have writer's cramp by the time you're finished because there's lots of papers to sign. You'll get copies of everything you sign and you'll be given a chance to answer questions. Again, we're now talking about what's happening at the loan closing. Next slide is what to do on the closing day. So let's probably... So remember, we decided that we're talking about closing on Friday. So what's going to happen leading up to Friday? Well, probably sometime before Friday, assuming the seller is out of the house, you want to do your final walkthrough. That means you're going to go with your realtor into the house. You're going to be checking to make sure everything is still working. You're going to want to make sure that whatever repairs are supposed to be made under the inspection addendum, that those repairs were made. And you're going to want to make sure that the seller, when they moved out, didn't damage anything. So that walkthrough is real important. Virginia is a let the buyer beware state. So you don't get to say, whoa, I missed this, seller, you need to come back in and fix it. That walkthrough is important. If you find a problem at the walkthrough, we bring it up and it needs to be corrected or escrowed for before you close. I always use the hot water heater as an example. Let's say on Thursday you did your walkthrough, and in doing the walkthrough you turn the water on in one of the faucets or the shower and you feel a little hot water and you just turn it right back off. But let's say in fact the hot water heater had broken, and after a couple of minutes of running hot water, you would have cold water. So you go and do the inspections on Thursday. On Friday, you come in and you do the closing. You start moving in Saturday morning. Saturday night, you're ready to take a shower. You turn the hot water on. You're standing in it, getting clean, and all of a sudden it turns to cold water. It's your hot water heater to fix. It's not the seller's. You had a chance to inspect it on Thursday and you didn't catch a problem, so now it's yours to fix. So that walkthrough is really, really important. If we find an item that needs to be fixed, it typically won't hold up closing. We can either get, realtors are real good, they have people, they'll get out to fix things really quick. Of course, with COVID going on, it may take a little longer, so we sometimes will do escrows. Okay, on closing day, we have to have collected funds. That's just another way of saying we need a bank wire. We need to have immediate access to your money. So you're going to need to wire it from our bank, from your bank to our bank. And there are all kind of protocols in place for how to make sure there are no wire fraud. So whoever's doing your closing, they'll have these protocols in place, all these safeguards. Follow it to a T, and then everything should be okay with your wire. Probably, one of the most important questions we get asked at the end of the closing is, how much money do I need to bring to closing? Well, we're going to tell you that amount and you're going to wire it. But the next most important question we get asked is, when do I get my keys? Virginia, or Central Virginia, doesn't have any hard and fast rules of when you get your keys. Technically, you don't own the property, in my opinion, until the final deed is recorded in the clerk's office, because the seller can't get his money until the deed's recorded and we know that the title is good in the name of the buyer. In that case, the bank says you can use the funds to buy the house. So typically, the ownership doesn't pass until that deed is recorded. So under our example that we closed on Friday, let's say for whatever reason the closing got delayed, it didn't happen till 2 in the afternoon, and then because of just the different procedures, needing the money from the bank, etc., the closing got delayed until Monday. The actual recording got delayed until Monday. Uh, and but the buyer's done everything they needed to do. They've signed the loan papers. The bank is sending money for the loan. The buyer has presented their money for buying the house. But because the clerk's office is doing COVID, are not letting you record in person. And actually, in some cases, some clerk's office require you to mail the deed to them. Some of them have drop boxes. So the recordings are going to be delayed typically. So have an arrangement that you'll be able to get your keys on that Friday once you've done everything that you needed to do, even though the deed may not be recorded till Monday. That's just something you'll work out between the realtor and the buyer and the seller. We'll just work all that out. I think the keys ought to go to the buyer once the buyer's done everything they needed to do. And you know, and most people agree and let the buyer have a key. I did a closing yesterday where it was new construction. It was kind of a problem with the builder. They had a different builder come in. It was a 2-year construction project. The guy is trying to move in. He wants to move in tomorrow. The loan papers were a little delayed. Make a long story short, after 4 o'clock, which was the last time we could record, is something called e-recording now that we do. We couldn't record, but everybody agreed the buyer had done everything they needed to do. So the seller allowed the buyer to have the keys and start moving in, even though we won't finish up till Friday. So make some arrangements with your realtor so that you have the ability to get the key on Friday, or better yet, do the closing on Thursday so by Friday it's all finished. Anyway, that's all I got. Good luck to everybody who's listening, and wash your hands and stay safe.
Bill, thank you so much. I hope everybody has. I've tried to come back onto the screen here, but yeah, there I am. My long hair, bad hair day scenario, but great information, folks. Thank you guys so much for watching. We've had a good turnout of folks. Appreciate the input that you've gotten. I hope we've gotten back to as many of you as we could. Please remember, if you have questions or you want more information or you want a realtor to contact you, homes@roywheeler.com. Phone number is 434-951-5124. And just to summarize and put everything together, I really appreciate everything that Jay's done and Bill's done. Just remember again that market analysts expect home sales actually to go down in 2020. Over nationally, they're talking it could be as many as sales of 4 million, which is a number that's been the lowest since 1991. And you can kind of look at that as a bad thing. But as a buyer, this makes it a market prime for you to make a purchase. Buying a home in this type of marketplace means that you can creatively take advantage of possibly a less competitive market. And with fewer buyers, you've just got more opportunities. The important thing is even though I just gave you a national number, you want to look at things locally, because even in our Charlottesville area and the surrounding counties, we serve, throughout the Charlottesville area, throughout the surrounding counties. We go across the mountain into Waynesboro and Fishersville and Stuart Straff and even into Stanton, and we go as far east as almost to Richmond, north and to almost Culpeper. We serve all those areas, and each of those areas are different. Some of those areas are still very, very busy. And if the house is priced right and good condition and located properly, you're probably going to be competing with other buyers. Whereas in other places, that might not be the case. So just keep that in mind. And in closing, just remember that buying a COVID-19 season that we're in may seem like a nerve-wracking experience. It certainly is, but it doesn't have to be. Hopefully, by listening to this, getting the information you've gotten from Jay from Movement Mortgage and Bill Tucker from Tucker, Griffin and Barnes, shows you that with a little bit of preparation, and adjusting and pivoting and learning how to do things a little bit differently, you can successfully navigate the new process and enjoy home ownership. We so appreciate your time. Hope you found this beneficial, and go out there and have a great Saturday and make the most of it. Thanks so much and have a great day.